If positive news of falling inflation and low unemployment seem to contradict how you feel about your finances, the Federal Reserve Chairman feels you. Jerome Powell commented on the disconnect as he announced Wednesday the central bank would leave interest rates unchanged.
People are going to the store and they're paying much more for the basics of life than they were 2 years ago, 3 years ago, and they're not happy about it. And it's fine that inflation's coming down, but the prices they're paying are still high. So that is what that has to be some part of why people are unhappy, and they're right to be unhappy.
In order to not cause more unhappiness, Powell expressed the usual dose of caution about any rate cuts that might risk a reversal in the inflation rate. The reason policymakers say they need more time to judge whether inflation is on a sustainable path towards its 2% goal. For more on the state of the economy, let's turn to Martin Baccardax. He's a senior editor and chief markets correspondent for TheStreet. Thanks for being with us again. What did you hear in what Chairman Powell said?
I was really expecting him, John, to at least take some sort of victory lap for the fact that we do seem to be on the path towards that soft landing that virtually everyone said was impossible. And by that, I mean the Fed has been able to largely tame inflation without inducing a recession. We're a long way from that. We're probably a long way from the Fed's preferred target as well, but we're certainly on the trajectory that would suggest he could maybe accept some congratulations. But he was cautious. He really said he didn't want to declare victory just yet. He said that they're a long way from that soft landing. And indeed, that caution suggested that he's not ready to cut interest rates as quickly as Wall Street would like.
And speaking of Wall Street, it reacted negatively. Were they reacting negatively to the fact that he's got a much longer timeline for possibly reducing rates, or that, he sees things in the economy that might, in fact, be actually not so great for Wall Street?
Possibly the latter, but very likely the former, in the sense that most market participants were teeing up the first of the rate cuts in March of this year. Now, Powell explicitly said we're not talking about March, but we are talking about rate cuts. So that certainly pushes the timeline further into the summer and perhaps into the autumn. He also talked about the fact that there are some elements of inflation that trouble him, and that he's not, and his colleagues are not convinced that even with this slowing of price pressures, that they are ready to say that inflation is going to get back to that sort of ephemeral 2% target. And as a result, I think maybe some market participants thought that he was seeing things within the wage data, within the job market, or the broader economy itself that they haven't quite anticipated. But I do think your first point is probably the most correct, in the sense that the market wanted cuts in March. They're probably not going to get them until June, or perhaps even after that.
Martin, you tweeted that if rate cuts come, they may coincide with presidential campaigns. Of course, it will always coincide because we're in a presidential year. I phrased that weirdly. But anyway, your tweet was quite plain. You said, good luck with that. What's your assessment of what might happen and how complicated that might be?
I believe, and I'm not speaking with any specific information, but I get the sense that Powell would probably have preferred inflation to be at a point where he could begin cutting soon, because then he could slow or even pause into the election cycle in the fall. But he's simply not there yet. And being a man of conviction with respect to economic data, he's not going to do anything that he isn't convinced about. So that puts him in the position, and the Open Markets Committee of the Federal Reserve in the position of likely having to cut rates into the autumn. And that is going to, of course, raise the specter of criticism from Republicans, who say that he's doing this only to buttress the economy and therefore sort of, guarantee or at least drive forward a Democratic victory, whereas the Democrats will very likely say that they are having to do this as a result of the positive economic data and not from political convention. So I do think he's going to find himself in that maelstrom, whether he likes it or not.
Martin Baccardax, senior editor and chief markets correspondent at TheStreet. Thank you so much.